Bank of America has made a major shift in its digital asset strategy, as revealed in its latest quarterly report. The bank has significantly increased its exposure to crypto through exchange-traded funds, or ETFs. Specifically, it has tripled its positions in Ethereum and Solana-based ETFs and boosted its Bitcoin ETF holdings to $37 million. This move suggests a growing institutional interest in crypto markets and could signal a broader trend among traditional financial players. The bulk of Bank of America's crypto ETF investment is in the iShares Bitcoin Trust, or IBIT, managed by BlackRock. The bank allocated nearly 70% of its crypto ETF portfolio to this fund alone, bringing its stake to $37 million in the first quarter of 2026. That's a significant commitment from a major U.S. bank, and it reflects a strategic decision to back Bitcoin through a regulated and liquid vehicle. Beyond Bitcoin, Bank of America has also increased its holdings in other Bitcoin ETFs, including Bitwise's BITB, Fidelity's FBTC, and products from Grayscale. This diversification across multiple providers suggests a desire to hedge against fund-specific risks and capture broader market exposure. The move also aligns. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. With the bank's broader digital asset strategy, which appears to be shifting toward a more active and diversified role in crypto markets. The most notable shift, however, is in the bank's approach to Ethereum and Solana. The report shows a threefold increase in its positions in ETFs linked to these two blockchains. This is significant because Ethereum and Solana are leading smart contract platforms, and their ETFs are still relatively new to the market. By increasing exposure here, Bank of America is betting on the long-term potential of these ecosystems and the broader adoption of blockchain-based applications. The decision to ramp up holdings in Ethereum and Solana ETFs also indicates that the bank is paying closer attention to the evolving dynamics of the crypto market. While Bitcoin remains the dominant asset, Ethereum and Solana have shown strong fundamentals and innovation in areas like decentralized finance and cross-chain interoperability. Bank of America's increased exposure could signal that it sees value in these platforms beyond just Bitcoin's price movement. From a market perspective, this kind of institutional activity can have ripple effects. When a major bank like Bank of America increases its holdings in crypto ETFs, it can influence investor sentiment and market liquidity. It also adds credibility to the asset class, potentially encouraging more retail and institutional investors to consider crypto as a viable part of their portfolios. However, there are still uncertainties. The crypto market is known for its volatility, and even with ETFs providing a more regulated structure, prices can swing sharply. The performance of these ETFs will depend heavily on the underlying crypto assets, and any downturn in Bitcoin, Ethereum, or Solana could impact the value of Bank of America's holdings. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Additionally, regulatory developments could affect how these ETFs operate and whether they maintain their current structure. Looking ahead, the next key signal to watch is how Bank of America's ETF positions perform in the coming quarters. If the bank continues to increase its exposure or makes further strategic moves in the crypto space, it could signal a broader shift in how traditional financial institutions approach digital assets. For now, the evidence suggests that Bank of America is taking a more active and diversified approach to crypto, and that could have lasting implications for the market.